Should you put your money into Bitcoin? A closer look at the current dangers. By StockCryptoBonus.com. People say buy the dip when Bitcoin prices go down. It'll keep going up is what people say when Bitcoin is going up. There never seems to be a bad time to invest in Bitcoin. This means that Bitcoin is a good investment no matter how you look at it. But in 2022, Bitcoin hasn't just gone down, it's gone down hard. Bitcoin's peak was in November 2021, when it was worth over $64,000. Today, it's worth less than $17,000, which is more than 75% less than its peak. Does that mean it's time to finally get on? What are the risks, and do they make sense? Is Bitcoin a good way to spend money? How you decide if Bitcoin is a good investment depends on what you think makes an investment good. Most investors would say that a good investment has an asymmetric risk profile, meaning that the potential rewards are greater than the risks. Let's look at some good and bad investments based on this definition. Most people think it's a good idea to buy shares of a high-yield S&P 500 index fund like the Vanguard 500 Index Fund ETF, VO. Many low to medium risk portfolios are built around VO because it is a pretty clear example of asymmetric risk. The diverse fund has a low expense ratio, 0.03%, a high float, and consistent returns of around 14%. Low risk and average returns equals a good investment. On the other hand, Vegas gambling is a bad investment. Statistics show that less than 40% of the time, gamblers in Vegas win, and since I play poker like a blind dog, my chances were even worse. High returns plus a lot of risk equals a bad investment. So what's next for Bitcoin? Well, Bitcoin has no problems when it comes to the money it could make. Bitcoin is the asset that has grown in value the most quickly this decade. Even after the recent crash, Bitcoin is still worth $15,767.40. 3 years ago, it was only worth $3,891.31. The first digital currency has had its ups and downs, and right now it's in a big down. But for now, let's give it a very high score in the potential returns category. But the dangers? Ooh, boy. Bitcoin doesn't fit into a profile of asymmetric risk. The problem with Bitcoin isn't just that the risk is high, it's also that the risk is unknowable. You see, you have to look at the facts to figure out how risky an investment might be. We have a lot of evidence in this area from stocks and real estate, including, but not limited to, market perception, sector performance, competition, Forms 10K, PE ratios, floating stock. So, whether it's a retail trader's homemade formula or a hedge fund's advanced AI-driven algorithm, this data fills in the gaps to help investors predict how likely an investment is to do well and, by extension, how risky it is. Bitcoin, on the other hand, doesn't give us much to chew on. Instead, it is kept up by demand and demand alone, and investor demand is just too unpredictable and changeable to use as a measure. Who can accurately predict and model when people's views will change about a certain asset or trend? Who could have thought that Elon Musk's appearance on SNL would cause the value of Doge to drop by 24% in an instant? Because of this, Bitcoin can't fit into an asymmetric risk profile. The value of the digital asset is so volatile and hard to predict, and there is so little data to back it up, that the risk can't even be measured properly. We can't be sure it's a good investment, so we have to assume it's not. Very high returns plus unknown risk equals a bad investment. Even though it has done well, Bitcoin isn't a good investment on paper. At the same time, it's hard not to feel FOMO when everyone knows someone who got ridiculously rich by buying Bitcoin at the right time. So, even if it's hard to explain on paper, isn't the chance of getting sky-high returns worth the risk? Still no, and I'll tell you why. You make strategic decisions with your money, and FOMO isn't an investing strategy. FOMO also means that you'll miss out on Bitcoin's huge returns year after year. But keep in mind that the value of Bitcoin is unpredictable. To think that it will keep going up just because it has been going up is to fall for the gambler's fallacy. In short, Bitcoin's volatility and lack of factors that affect its market value make it too hard to predict, so it's not a good fit for an asymmetric risk profile where the house, you, always wins. What are some other risks that come with investing in Bitcoin? A Bitcoin investment isn't just subject to market volatility, it's also vulnerable to some serious outside threats that could wipe out a lot of value overnight, or even your whole portfolio. Here are some things to think about if you want to invest in Bitcoin. Hacks, cons, and thefts. CNBC says that hackers and scammers stole a record $14 billion worth of cryptocurrency in 2021. This is a 79% increase from the amount stolen in 2020. When MTGOX was hacked in 2014, it was handling 70% of all Bitcoin transactions around the world. Since then, 650,000 Bitcoins have never been returned to their owners. Now, you can protect your cryptocurrency from hackers by putting your private keys in a cold cryptocurrency wallet. Unlike a hot cryptocurrency wallet, a cold cryptocurrency wallet is always offline. But using a cold wallet brings a whole new type of risk, which we'll talk about next. Having your wallet stolen. What do a USB stick, a hard drive, and even a piece of paper all have in common? All of them can be lost. Just ask James Howell, who threw away the wrong hard drive in 2013 and has been looking for it in a landfill ever since. Who can blame him for getting his hands dirty and not giving up? There are 7,500 BTC worth more than $277 million on that hard drive. 20% of all Bitcoins are lost because private keys are lost or forgotten. Regulation. Increased rules don't just hurt the portfolios of traders in that country, they can also cause prices around the world to drop. India tried to pass anti-cryptocurrency laws in 2018, but the Supreme Court threw them out in 2020. According to Reuters, this caused Indian investors to pile into the market. Then, in 2021, a new ban was proposed, which officials are confident will be passed into law. Russia's central bank also wanted to ban crypto activity in 2022, and when China announced plans for a new crackdown in May 2021, Bitcoin dropped $10,000 or 25% in a few days. Awful press. In addition to tightening regulations, bad news seems to hit Bitcoin especially hard. This year, when Terra went bankrupt, Bitcoin went down. Then, when Three Arrows Capital went bankrupt, taking with it a number of crypto lenders, Bitcoin fell again. And just recently, the collapse of FTX started a new crypto virus that pushed Bitcoin to its lowest point since November 2020. The Metaverse. Mark Zuckerberg thinks that we'll all be in the Metaverse in 5 to 10 years, even though Facebook's investors don't seem to agree. Even though investors see a lot of potential in virtual real estate and non-fungible tokens, NFTs, Bitcoin doesn't seem to have a place in the Metaverse. NFTs are run by Ethereum. Proof of stake is used by Cardano to make smart contracts more green. Companies like Meta, Walmart, and others are making their own stablecoins that can be used as value stores. So what's next for Bitcoin? Bitcoin might be too old for the Metaverse because it uses a lot of power and doesn't have many practical uses. And as more investors realize this, they might start to trade their BTC for cryptos that are less likely to go down in value. What about buying and holding? Then, do you think Bitcoin is a better long-term investment? Should you just buy and keep the money? Many investors are thinking about making a long-term investment in Bitcoin because of its messy short-term volatility and huge long-term gains since 2012. After all, HODL is the unofficial motto of crypto investors who want to keep their money. For those who don't know, the term HODL comes from a Bitcoin Talk forum post from 2013 in which a user named GameCube, who had been drinking whiskey, proudly wrote, "I am hodling." Holding on for dear life became a backronym for HODL over time. So, is it still a good idea to buy and hold right now? Bitcoin has had a great run since 2012, but the growing number of threats may mean that it's finally out of gas. David Hunter, CFA, CIA, Director of Research and Investments at CPC Advisors, says, "It just seems like the asymmetric payoff you can get when these coins are trading for pennies is no longer possible with 5-digit valuations. In fact, it seems like the payoffs could be different in the wrong way." Varun Marnini, CFP, Executive VP of CPC Advisors, said, "Investors shouldn't think of crypto as a safe haven asset class because it has lost over $2 trillion since its peak." Varun's last piece of advice is to be careful when following crypto fans into the breach. How can I still make money without taking risks with crypto? There's an old saying that I think fits Bitcoin well. Sell shovels during a gold rush. Anyone who wants to use asymmetric risk to manage their money shouldn't buy Bitcoin directly. But you can still make money. So, what does selling shovels mean in terms of Bitcoin? How can you profit from Bitcoin's possible price increase without taking on too much risk? Here are some ways you can invest in cryptocurrency without buying any. Buy crypto ETFs. Buy crypto stocks. Invest in the Grayscale Bitcoin Trust. Buy blockchain stocks and ETFs. Invest in companies that invest in crypto. Mine it and essentially get free crypto. Check out how to start mining Bitcoin in 60 seconds. In conclusion, Bitcoin is like a Willis Jeep in the world of cryptocurrencies. And just like that famous army truck, it has fought and won some very important battles, helped pave the way for what came after it, and deserves our respect for all it has done to pave the way. At the same time, though, it's old. It's dangerous and unstable, and each year, new rules try to make it less and less common. This video originally appeared as an article found at StockCryptoBonus.com. Read more articles like it and get more information, tips, and advice about the stock and cryptocurrency markets at StockCryptoBonus.com. Remember that the price of investments may vary depending on changing market conditions. Don't forget to subscribe and click on the bell icon to get notification to get our latest videos on big investing and financial topics of the day.